Right, this week's market outlook. We'll start off with the calendar, then we'll go over the individual currency analysis fundamentally, and then we'll end it on TradingView, going through our technicals for the week ahead. So yeah, starting off with the calendar, I've already bookmarked, I'll go full screen. I've already bookmarked the main events I'm looking out for this week. So these are all the events I am mainly looking at next week. So for Tuesday, we've obviously got some RBA meeting minutes, we've got the UK labour market data, and then we've got European ZEW economic sentiment, and then the Canadian inflation print. Wednesday, we then have the RBNZ interest rate decision on Wednesday, as well as the press conference. We then have UK inflation, and then FOMC on Wednesday. Thursday, we've got Australian employment data, Japanese inflation, and then finishing it on Friday, we've got some UK retail sales, and then US GDP quarter-on-quarter estimate, which is forecasted to slip, and then obviously PCE as well. So starting off with the US dollar for this week, myself, I'm bearish on the dollar going into this week. So reason for that, following last week's heavy US data releases, obviously that being NFP here and CPI here. Short end yields have ended the week on the back foot, hovering below the 3.5% handle. The main data this week for the US arrives at the end of the week, which we have obviously gone over. So advanced GDP quarter-on-quarter estimate, which is expected to slow, and then core PCE and PCE, which is expected to remain pretty sticky, which it's not going to warrant a big upside move in the greenback unless we get a serious surprise to the upside. So yeah, essentially the Feb CPI print has come in overwhelmingly dovish, and it's retraced the whole NFP move, which kind of indicates to me that the markets are leaning towards a more dovish Fed as of right now. With volatility remaining quite elevated amid market uncertainty, we are seeing some inflows into the dollar, but nothing major as of now. So yeah, that is essentially it. Obviously, risk sentiment is sort of ranging at the moment. We've got equities range bound, we've got gold range bound. The market's kind of waiting for the next flow to take over. Looking at the insights for the US dollar, we obviously have had quite a lot of bearish insights recently. However, Credit Agricole say that the focus for this week is going to remain on USD rebalancing, which obviously is positive for the dollar. Give that a pause and read it if you want. We also have ANZ here are saying that they are expecting a minor pullback in NZD USD below the 0.6 handle into next week's RBNZ. Use it as a dip to enter fresh longs, which we will go over. So yeah, they are expecting a slight dip in NZD dollar next week, which they are advising everyone to use as a dip to get into further long positions. So yeah, that is essentially the dollar wrapped up. The dot plot is pretty set that March is going to be a hold, and then the following meetings in April and June are going to be coin tosses for whether we get a 25 basis point cut or a hold. So yeah, that is essentially what we are looking at next week for the US dollar. Going into the pound. So the pound next week is going to be very, very data dependent. But ourselves, or me at least, I'm bearish on the pound into labour market data on Tuesday. So Monday, I'm in favour of a bearish pound call, and then labour market data on Tuesday and CPI on Wednesday is going to dictate where we go from there. Just a side note, data-wise, I feel like we could actually see some solid data out of the UK beating forecasts. Just statistically, it makes sense. But that's very speculative, and I wouldn't then say get into longs 2 minutes before CPI comes out or anything like that. So yeah, we've been bearish on the pound for the last few months for good reason. Weak data, dovish central bank, which in turn has led to widened rate differentials against the sterling, pushing pound crosses lower. However, this is a big week for data, as we've mentioned, which could flip the narrative in the short term. This week we have labour market and inflation data, both as of now forecasted to come in lower than the previous readings, which on paper supports our bearish pound thesis. However, in times like this where the market front runs prints, forecasting weaker data and a more dovish central bank, it's very easy to get caught on the other side of price. So my advice this week for the pound is that you should be focused on the GB02Y, that's the 2-year gilts, more than the pound. The reactions are going to be key from the data. Obviously, we know seasonality wise, Feb is not the best for the pound, it's the worst month for the pound. So it does make sense for us to get weak data as well. If we look at the institutions, MUFG are basically bearish on the pound against the Australian dollar, which we've been saying for a good few months and we've been capitalising off. Morgan Stanley are bearish on the pound, MUFG bearish on the pound. Essentially, the majority of institutions are bearish on the pound. And obviously you can see here, Bank of England chief economist urges caution before further rate cuts. And then you've got UBS Mish on private credit AI disruption risk. Two pieces of news which are bearish for the pound. So yeah, that is essentially it next week. Very, very data dependent and a very data filled week for the pound. Going into the euro, this week on the euro, it's going to be very dependent on the cross. So you're going to be bullish on some crosses with the euro, but bearish on others. Data-wise, it's looking pretty decent. My eyes, as I've mentioned, are on the ZEW economic sentiment, PMIs, and then the current account, which are all forecasted to beat the previous readings. However, as usual with the euro, it is very dependent on crosses. We've had a great run with euro pound and euro AUD. I think this week a nice opportunity for upside would be euro CAD, which we will go over. And then obviously you can see it from the institutions. Bank of America bullish on the euro. They're basically saying for structural dollar selling, don't look to China, look to Europe. You also have Credit Agricole here saying they are bullish on the euro against the Swiss franc. Not sure I agree with that for now, but it's definitely it's an intervention level for the SNB, which they're more cautious on. Deutsche Bank are also bullish on the euro against the dollar. So yeah, those are some recent insights around the euro. Obviously, you can clearly see from the yield reactions here, it's neutral to hawkish. And yeah, Bloomberg have come out and said that the ECB revamps euro liquidity offer to boost currency's appeal. Bank of New York clients hedge dollar exposure by most since 2023, the bank says. So yeah, interesting. Basically just evidence that there is diversification away from the dollar, which will in turn benefit the euro. Going into seasonality for the euro, pretty neutral. Obviously, it says the DXY here because the DXY is the opposite of the euro, and it's pretty neutral. So it's a tiny bit bullish, but nothing major for the euro. So yeah, that is it on the euro. Going into the CAD this week, we are bearish on the CAD, which makes a change from last week. Canadian yields, especially the short end, are starting to fall as markets consider one final cut by the Bank of Canada before they really finish their easing cycle. Regarding yields, we also have Canadian CPI this week, as mentioned, obviously Feb 17th, you can see here, which is expected to slip, reinforcing the downtrend in Canadian yields. US oil is also taking a hit from geopolitical uncertainty falling, which supports the bias for downside in the loonie. And then if we just look at the insights here, the newest one here from Barclays says they are bearish on the CAD. They say the CAD remains vulnerable to geopolitical risks and is to underperform against the Australian dollar and New Zealand dollar. So once we get into our technicals, we actually have a potential position lined up on AUD CAD, which we will be walking through. And obviously you can see from yield reactions here, the data's been pretty dovish. Yeah, data's been pretty dovish, nothing big there. So yeah, that is the CAD. Keeping it simple, we're bearish on the CAD. Australian dollar and New Zealand dollar, as always, I do these two together. As of now, the Australian dollar is being mainly driven by developments in the equity markets. We can see that the AUD took a slight hit on Friday and Thursday following the dip in ES and NQ, that being the S&P and the Nasdaq. However, we expect this to be quite temporary, giving us more opportunities for AUD longs, especially considering the other factors like a strengthening Chinese yuan and Chinese flows in general, rising short-end yields and strong macro data. And then this is the exact same with the Kiwi. We're seeing yields rise, we're seeing decent data, and then obviously we've got the big RBNZ meeting this week, which is going to be key in deciding where short end yields move from here. Looking at the data out of Australia, I mean, we all know it's very, very, very hawkish. We've got labour market data this week, which is forecasted to slip a tiny bit, but it's not going to derail the path of higher yields for the Australian dollar. Not at all. I mean, if you look at all the insights here, MUFG bullish on the AUD, Barclays bullish on the AUD, ANZ say they're bearish here, but that's only against the NZD, which is obviously due to the hawkish RBNZ repricing, which they believe is going to happen from the meeting. If you look at the recent comments here, we can see that Bloomberg have said that the RBA is open to a hike again if inflation proves sticky, which is obviously good for the AUD, bullish on the AUD. And I mean, just looking here, labour market strengthening, inflation rising. February is typically not the best month for the AUD against the dollar. However, seasonality is just another confirmation. It's nothing major. So yeah, that is essentially it for the AUD and NZD. See if there's any other. Basically, as we went over with ANZ, they're expecting a minor pullback in NZD USD, but they're just using this as an opportunity to get in for more long positions. So that is essentially everything there. Going into the yen, we are actually bullish on the yen this week. Obviously, last week we said be cautious, intervention. You also had the elections, and that has played out quite well in our defence. I managed to catch a dollar yen short position, which was lovely. But yeah, essentially the yen has had a lovely rebound last week following the LDP snap election victory, where Takaichi secured her position in the government, or cemented it, I should say, mainly due to the long end of the curve falling, giving the yen some relief. Rate differentials continue to support the yen on crosses, and as long as the long end continues to fall, we remain bullish on the yen. So what we mean by this is, as long as the political landscape of Japan stays as it is, or obviously improves, you're going to see the yen strength. However, the reason we weren't being driven by short-end yields in Japan is because we were being driven by long-end yields, the yen, sorry. And now long-end yields are taking a slight retracement, slight cooling off. This is obviously great for the yen. If we look at recent news here, Bank of Japan hawk tomorrow flags spring as possible timing for rate hike. You obviously have, give it a pause here. This one was quite good. Mizuho executive says that the Bank of Japan could hike rates as early as March. And these are a very, very big Japanese firm, which kind of gives you some insight into what could potentially happen. So yeah, looking here at the yield reaction, following the Feb LDP snap election, the long end, 10-year, 30-year, fell minus 38 basis points, which is great. It's great for the currency, especially with the current landscape. And we didn't get many insights from last week for the yen, which could indicate that a lot of the institutions, are starting to turn their head on bearish yen and maybe switch to the more bullish side of the coin. But yeah, that is that. Regarding the data this week, we've got inflation coming out, which is expected to dip a tiny bit, I believe, maybe 20 basis points. But I don't see this derailing the yen's strength, because as of now, the data isn't controlling the yen, it's politics. And then we'll end it on the Swiss franc, which is pretty simple. We've got the VIX spiking. We're ranging between the 50 and 20 handle. Equities are struggling to make new highs, and gold making a slight rebound. The weaker dollar should also support gold this week, which all contributes to a stronger franc. So we're bullish to neutral on the franc for sure. So that is essentially all the fundamentals regarding G8 this week. Now, if we actually go over to TradingView and go through our technicals, we'll start off with the DXY. So we're bearish, and I'm looking for some downside off this 97 handle here. So ideally, come up here, hit the 97, and then we go down. That's what I see this week. I feel like for us to break out of this, yields are going to have to shoot up, and I don't see a big catalyst this week, at least, for that to happen. Apart from maybe GDP on Friday, or PCE. So yeah, that is the DXY. Pound against the Australian dollar. I like the 1935 for a bounce here. If not, this level is beautiful here, the 195. So it's basically, it's either here or I want to get in up here. Which then leads me to believe if the data is strong on Tuesday, that obviously invalidates this level, and then this would be my next key level to fade the strength. So right here is what I'd be looking at, the 195. Similar thesis on GA. I mean, we've had a lovely run with GN, sorry. We've had a lovely run with GN. This level here, if not, I want to get in around the 2275 up here. Euro pound. Took a loss last week and then we took 2 wins, so ended up actually beating. We got revenge on Euro pound, but yeah, I'm looking for this level here. I think we're going to get a nice bounce on Monday into the labour market print. That's forecasted to not be that strong. I think this level here, or somewhere around here, would be great. Just depends if we get tagged in on market open. Dollar yen, like I mentioned, this was the position we caught last week. I'll be monitoring price in this level. As soon as we get into the above the 1535, as soon as we get above this level, I'm looking for sales. AUD USD, similar thesis here. I'm looking to get in around the 0.704, 0.725 even. I think this level looks beautiful. Very, very discounted. Euro dollar, less so. NZD dollar, as the funds, who was it? Who mentioned it? It was ANZ, I believe. They're looking for below 0.6. So if we actually just mark the 0.6 handle here, we can see what they're sort of looking for, which would be, which is interesting. So if we go here and we go on the 1 hour, so they're looking for prices below there. So probably something, they'll be looking to get in around here. So yeah, they're looking for regions around here, below here. That's where they want to get in. Obviously, we could front run it here. All depends on if we get there before the RBNZ. If we do, might take it. If not, we will wait for the RBNZ and we will see if we get our nice desired level down here. CAD CHF, I'm looking for this level here, above the 565 for any shorts. Before I even think about shorts, I want to get on the 565 level up here. GJ, this level here looks lovely, 209.75, around there. GU, this is a very speculative play, but this is essentially all linked to the data flipping that narrative. So don't take this with a grain of salt, because if the data continues to come out poor, I'm obviously not going to enter a weak versus weak pair. But dollar Swiss, I like this level here. AD CAD, as mentioned, I think this level here looks beautiful. I might even hold it for like a 1 to 3. But this 9583 handle there, this is another handle which I think could trap people in. And then this handle here is where we get a lot of our strength coming in for the AUD. CAD yen, I believe this is the last one. Basically a mirror of UJ. I'm looking to get in shorts around this level here, obviously due to oil taking a big hit, as we mentioned. If we go on the daily, I mean, I don't want to say a big hit, but it's definitely on the back foot. We'll have to monitor developments, because if we then see oil starting to shoot up, then it does increase the risk of our position. But like stuff like EuroCAD, which I believe I've gone over, or maybe I've not gone over it. Yeah, so EuroCAD, I'd probably be looking for, what does the daily look like? I'd probably want to get in around, sorry, probably around here. If I'm to be conservative, I'd want to get in around here. This is a very risky play there. This would be my go-to for sure. So yeah, I mean, that is essentially all my technicals this week, a lot more than usual, which is always great. Doesn't mean I'm going to take all of them, but that's where my sort of macro thinking is at. And yeah, as always, drop a comment if you have any questions. All my socials are in all our socials are in the description of the video, so you can shoot me a message on Twitter, Instagram, do the comments, and obviously in our own chat room here, which I can show off here. So yeah, good, starting to get a bit more active in there, which is nice. But yeah, that is my weekly outlook done. So yeah, we'll catch you in the next one.